Hi, I'm Scott Wentworth, the founder and head writer of Wentworth Financial Communications. I recently had the pleasure of moderating a panel hosted by the Financial Communications Society in Chicago about sustainable and responsible investing and some of the challenges that it creates for asset managers from a marketing perspective. One of the panelists was Colin Rennich, who's the head of sales at Appleseed Capital. And Appleseed has been involved in sustainable and responsible investing since way back in 2004. And Colin talks about some of the challenges that they have today now that every large asset manager has some involvement in ESG or in sustainable investing. And he talks about some of the challenges that Appleseed is having now, showing that what they're doing goes beyond simply ESG factors and talking about how they can really differentiate themselves in this increasingly crowded space. Here are some of the highlights of what Colin had to say.
So again, I head up all the sales and marketing efforts for a small firm here in Chicago. We're a 20-person organization, but we've been around since 1990. And we really started to get serious and heavily into this space in about '04. So it doesn't really seem like that long ago, but all this, as you know, has been moving so quickly. We're kind of like a dinosaur in the room in a lot of ways already, even though we're kind of new, we still feel to the space. So basically, Appleseed does a few things. We manage money for some families here in town. We run a mutual fund and we run a hedge fund. The hedge fund's really one of the only U.S.-based hedge funds that applies, ESG, socially responsible, whatever we want to call it, to what we do. As far as our biggest challenge, it really is terminology, and it's the onset of really every large financial asset manager in this country saying we need to start doing something in this space. What we've been talking a lot about is how do we show what it is that we do? How do we show these extra things we do? How do we show the intentionality that we have? That is something different than another company out there. Socially responsible investing is one thing. It's not investing in things like oil stocks and firearms, and there's a growing kind of movement of that people want to avoid those things, right? Impact investing, we try to put money into different kinds of community banks. There's an initiative here in Chicago called Benefit Chicago that we've tried to support and fund. That was a partner of Calvert and MacArthur Foundation created Benefit Chicago, and we try to invest in that and fund that. And we do a lot of shareholder advocacy. We try to influence management teams through proxy voting and initiatives to have a more diverse board of directors, to publish sustainability reports and various things. So we're doing all of these things, and we have done a lot of these things, but then ultimately the term ESG just gets thrown around generically, and we all get tossed into the same bucket, right? So that's probably our biggest challenge. What we've been seeing in the industry and what we're trying to figure out is, how do we mention kind of all of those things that we also do on top of just, reviewing, again, ESG, which is kind of easy and everyone does.